So Robert, lots of interesting data out today. We'll start with payroll jobs growth. We saw some positive information come out. How do those numbers look?
Yeah, Susan, the headline number, the 200,000 new jobs added in January, that's a very good number. But even beyond that, I think what financial markets are really paying attention to are the average hourly earnings or wage growth. And we're starting to see a little bit of warmth there, not hot, but warm, coming up 0.3 for the month and up 2.9% for the year. And so that starts to feed into our calculations for what the Federal Reserve is going to be doing with interest rates going forward. Because as those wage numbers warm up, we would expect the Federal Reserve to increase interest rates maybe a little faster if they're warming up more than expected. So this is still not hot, but it's warm, and it's heading in that direction that everyone's sort of anticipating for the remainder of the year.
All right, let's talk about manufacturing. We also have positive information there as well.
We finished 2017 in really good shape with manufacturing indicators, and that was very nice to see. And so we got the ISM manufacturing index for January. So the good news there is these positive manufacturing indicators are bleeding over into the first part of this year. These are very good numbers. It really speaks for the strength of the U.S. economy right now, and it's something that's we haven't seen this kind of consistent gain in manufacturing in a while, so it's nice to see that.
Let's move on to the next Fed meeting, which is happening in March. What can you tell us about that?
Yeah, we've got the next Fed meeting coming up March 20th, 21st. There is a growing expectation that we'll see another rate hike, a 25 basis point Fed funds rate hike announced on March 21st. I share that expectation, but I think it's going to be a very interesting meeting because it's going to be the first meeting where Chairman Powell really is at the reins, our new incoming FOMC Chairman, Jay Powell, and it's going to be interesting to see the dot plot. The Fed releases a dot plot every other meeting. The last one came out in December, so the next one will come out here in March. And the dot plot is that forward-looking expectations of what the individual voting members who set monetary policy, where they expect to see the Fed funds rate over time. So it's like a forecast. And what we're going to be looking for is whether that forecast moves up or down or stays the same. Now, let's go back to the first point, the wage data that we were talking about. If the wage data continues to be a little bit on the hot side, I would not be surprised to see that dot plot start to shift up a little bit. And what that means is that'll shift expectations from 3 Fed fund rate hikes this year to perhaps 4. And so I do think there's upside risk that we might get one more rate hike this year than was indicated last time in the December dot plot.